In this week's episode of the Stock Scores Market Minutes, I will answer the question, why do stocks go up? Plus, provide my regular weekly market analysis, look at a couple stocks to watch, and the trade of the week on LMFA. All right, let's get into this week's topic. I'm often asked by people, why do stocks go up? What is it that drives the price gain or conversely, the price loss? Well, pretty simple, and let's get into it in this discussion. Stocks go up over time simply because investors are willing to pay higher prices. Now, they're motivated to do this by the perception of improving fundamentals. When we talk about fundamentals, it's really the company's ability to make money in the future. So simply then, this means investors think the company has improved its ability to make money, not necessarily in the past, but tomorrow, a year from now, 10 years from now. Now, to make this judgment requires information, and some investors have better access to information. And when they have some information that indicates the stock is worth more, they will buy aggressively. And when they do, they create abnormal trading activity. And that's really the core of the stock scores approach, to look for abnormal trading activity as evidence that some investors are trading on better information. And that ultimately is what drives the upward trend. All right, let's get into this week's analysis, starting us off with the US markets. And here is a chart, the 30-day, 30-minute chart of the S&P 500. And you can see that we've been in a nice upward trend. We are running away from the trend line a little bit there on Friday, jumped up in anticipation of perhaps a trade deal between China and the US. That means that it's getting a little risky to chase stocks here. Anytime you move up and away from the trend line, it gets a little emotional, and that usually precedes a pullback. Now, I don't see any sign of a pullback yet, but some caution is warranted in the short term. And it becomes even more clear when you look at the longer term chart. This is the weekly chart, and I can draw a downward trend line, something like that. And you can see that after being really far below the downward trend line toward the end of December, we've made quite a jump back, and eventually we're going to hit that upward trend, or pardon me, that downward trend line. And that's where the market will find some resistance. The sellers will get more motivated, and it's likely that this upward move will end, at least in the short term. So perhaps this week we will spike higher, get into that 270 level on the SPY before the sellers start to take some profits. And I would expect that a pullback will follow. And therefore, I want you to be fairly cautious if you see a breakdown on the shorter term chart. If you see a break of the upward trend line on that chart that I just drew, the 30-day, 30-minute chart, then be cautious. Now, looking at the small cap market, the Russell 2000 ETF, IWM, pretty similar situation. We are having made a really strong gain since the third week of December, and we've actually broken the downward trend line on the daily chart. However, now we come into this resistance where the market traded sideways for really most of November and half of October, and there will be a fair bit of selling pressure in there. So I think we could still go a little higher, maybe get into the 155 level. But at that point, there's going to be people willing to take some profits. And so I want you to be cautious. Anytime you start to see some weakness, you too might want to take some profits if you've traded the bounce successfully. Moving along to the Canadian markets, they've also done quite well of late. Here is a chart of the TSX, and you can see it actually looks better than the SPY chart, partly because it's done worse for most of the year, so it has had more ground to make up. But again, we have an upward trend line. That's sort of the first one, and then we can draw a more shallow or shorter term one, something like that. And until that upward trend line is broken, I would stay on the long side of this market, but recognize that there's going to be profit taking eventually. When you've got 11 or 12 up days in a row, eventually people are going to take some profit. So watch for a break of that trend line as a cue that it's time to take some short-term profits, although that doesn't necessarily mean the market is done longer term. Simply what's happening here is when we look at this longer term chart, you can see that we're coming up to the resistance level that was built through late October into November before the second wave of selling there that we got in December. So now I expect we're going to sort of get stuck here for a little bit, and then maybe we'll break out. That'll be the break from a cup and handle pattern, and that will allow this market to move back up toward the all-time highs. What's critical, I think, is whether the oil market can stabilize, and we'll talk about oil in just a moment. Looking at the TSX Venture, it too has had a little bit of a bounce, largely in the cannabis stocks. We're maybe a little bit oversold going into year end. They've now made back some of those losses. I think there's still some work to do in that sector, but it certainly is looking like it's stabilizing after some selling pressure. But the critical thing is the downward trend line. We haven't really broken that yet. You can see we've risen up to it and we're stalling underneath it. For the buyers to really be back in control of this market, we need to see that downward trend line get broken. So keep an eye out for that near term. It could happen tomorrow, but it may also not happen for months. Onto the currency market, the US dollar, of course, has been the story over the last year, quite strong. It suffered some profit taking over the last 4 weeks, but then last week it started to show some stability. The reason that candle is green is because the market closed above its open for the week. So after starting the week on the low point and then ending the week toward the high range or high area of the range for the week, that is a positive sign. It's kind of like what happened here, where we went pulling back and then we closed above, and that led to the next upward leg. The difference, however, is that this market, the US dollar market, has broken its upward trend line. So my fear is that we may get a little bit more of a rally and end up building a falling top. And if we build a falling top and roll over, that's going to be an indication that the US dollar is going to fall. So what we want to watch for from here is, does the US dollar make new highs, or probably more likely, does it make the falling top and then start to move down again? If so, we're going to have to start to get bearish on the US dollar. Canadian dollar was heavily oversold in the last couple of weeks. It has made a bit of a resurgence. You can see we were far below the trend line. We're coming back up to it. We're not there yet, but we're getting close. But that's the main issue, is that until we break that downward trend line, we should remain bearish of the Canadian dollar. Now, at least we are moving up the last 3 weeks. But again, until we can actually break that downward trend line, I wouldn't get too optimistic. We've been in this downward trend for a year and a half, a steady supply of falling tops. Now the question is, can we start to build some rising bottoms and then ultimately break that downward trend line? That would be the signal of a reversal for the Canadian dollar. Interest rates, of course, important for the stock market because rising rates tend to be worrisome for the market. You can see that this chart is, again, the bond market. So you have to think of this in the opposite way. If the bond market is moving up, that means interest rates are moving down. And for the past 2 months, we've had gains in the bond market, largely because investors were, jumping out of stocks and looking for some safety. And now that the bond market has hit that resistance level, we're getting some selling pressure. This past week, we sold off a little bit and perhaps are starting to test that upward trend line. This upward trend line should be drawn more like this. We're not actually breaking it yet. So do we hit that upward trend line in reverse this week? Remains to be seen, but that's what I would watch for. And are we ultimately going to keep hitting against this ceiling price, which is held up for some time, and then break it? Or are we going to move back toward the lows? I think it's too early to tell. The key things you want to watch for is, does the upward trend line get broken, or does resistance get broken? Until then, we're going to grind sideways inside that range. On to commodities, we always like to take a look at gold and oil, starting us off with gold, which was moving up in some ways because of the weakness in the stock market, people looking for some safety. But there's also been some big merger deals in the gold market, and I think that was the catalyst that brought a lot of the strength. Perhaps rumors out there that there was some mergers and acquisitions activity in the industry. That put the gold market a little ahead of itself, moving up and away from the trend line, as I've shown here. That implies that we should pull back to the trend line. So I think we could have another week or two of weakness in gold. I wouldn't get too pessimistic until the upward trend line is broken. But short term, I think there's a good chance we see lower prices for gold, taking it back to the upward trend line. Well, of course, the scariest or ugliest market for a long time has been that of oil. It has been in a steady downtrend since the start of October. It is starting to show signs of bottoming. So step one is we had the break of the downward trend line. Step two is the build of a rising bottom. And then step three is a break from the rising bottom, which we got on Friday. And that could be an indication that oil is going to rebound. And I think if it does, there's probably some good deals to be had in the oil stocks. I'd like to see a little more strength because I'd like to see it get through that price peak from early in December. That's a little bit of resistance, but certainly the oil market looking better. As you know, I've been a bear on oil for some time, but it's starting to look better. So my ratings then, I am neutral on the US and Canadian stock markets on both time frames. They've made some good gains, and I think that sets up for a pullback near term. No signs of that pullback yet, but I do want you to be cautious. Gold, neutral long-term, bearish short-term. That short-term breakdown that we had last week probably indicates that in the next week or two, we still see some lower prices in gold. Oil, neutral on both time frames. Stock markets have made a considerable bounce back, and now they're coming into that longer-term resistance at the downward trend line. Now, this means there is a good chance that that recent strength we've enjoyed will reverse soon. There's still no sign of it, but watch for it, and so be careful about chasing strength. Gold is showing signs of future weakness near term, and oil is improving nicely. And that leads me into the stocks to watch for the week, because I think there's a couple of energy names to keep an eye on, and there's certain things that we need to see happen before these stocks are worth considering. But in this case, this is Birchcliff Energy. This is a Canadian stock, Canadian listed stock. Step one, break the downward trend line. Step two, build the rising bottom. And now what we need is step three to break up and through that resistance at about 355, 360. If it can do that this week, I think it's worth considering for a bounce back, perhaps getting back into that trading range around $5. Looking at another name in the Canadian energy sector, this is Crescent Point. Similar situation. We had this downward trend line get broken. Now we're building a rising bottom, but the key thing is we need to get through that resistance at about 475. And so keep an eye on this stock. If it can make a good break through 475 with perhaps an increase in volume, it'll likely be on the back of improving oil prices. I don't think this is a stock to buy today, but it is a stock to watch to buy maybe tomorrow, maybe a week from now, if it can get through that resistance level. All right, so now I want to take a look at the trade of the week. And this is a case where we really have a good example of what I was speaking about when I was talking about why do stocks go up. It really comes down to improving fundamentals, or at least investors' perception of improving fundamentals. And what I've created for my stock score students is an indicator called the action candle. And you can see that indicator plotted anywhere there's a pink dot. So there's a few pink dots on this chart. This is the 13-minute time frame for this stock going back to last week. And on Monday of last week, it made an action candle right here, an indication that there was some investors who knew something about this company that was positive, and they started to buy it aggressively. And then it happened here again. Anywhere you see a pink dot, it means that there was aggressive buying with strong volume. That's what that indicator looks for. Well, ultimately, we had the stock gap up huge on some good news. But my point is the stock market isn't fair. There were people that knew about the information that was announced on this day, and they knew about it the previous day and 3 days prior. And this demonstrates, again, the stock market isn't fair. And if you just trust market activity, look for that abnormal trading action, a big part of what I teach in the Stock Scores courses. You can predict these big jumps. All you got to do is follow the action. Well, that has been the Stock Scores Market Minutes for January 21st, 2019. I hope that you've enjoyed it. If so, please click on the like button, subscribe to the channel. Remember to hit the little alarm icon beside the subscribe button. That will give you email alerts when I upload a new video. Have a great week in the market and trade well.